The global picture, stock markets in Europe and the United States are bracing for the biggest falls since the global financial crisis. After the start of trading week saw panic selling amid the double threat of coronavirus-driven global recession and an oil price war. Over in New York, stock market trading was briefly suspended after coronavirus fears triggered a wave of selling. The S&P 500 index plunged by 7% at Wall Street Open, which triggered automatic circuit breakers to let investors catch their breath. It follows huge losses on Asian markets on Monday, where fears about the worsening worldwide economic slowdown were exacerbated by the shock decision by Saudi Arabia over the weekend to increase oil production in an attempt to drive competitors such as Russia and the US out of the market. The price of Brent crude oil fell nearly 30% to $31.14 on Monday, its biggest single fall since the start of the first Gulf War in 1991. Some experts predicted that it could fall even further unless the Saudis and Russians return to bargaining table. Lullu Krugel is chief economist at PwC, joins us now on the line. A very good evening to you, and thank you so much for joining us, Lullu. So, as I mentioned, those predictions, some saying that it could be worse than what the global market suffered in 2008 crisis. What do you think?
Well, I think we've seen a lot of records already over the last couple of days. Just the movement in the rand and the volatility is just absolutely astonishing. I have been trying to remember the sense of fear and panic of 2008, and you know it's difficult to actually remember what happened, everything that happened at that point in time. But certainly, I've never seen so many things go wrong at the same time. I think that is the big challenge that we're sitting with. And in fact, measures of uncertainty that's been done by the University of Stanford since 1997 show that at the end of last year already, we were at levels of volatility and uncertainty higher than 2008. So the markets already were already more jittery than they were in 2008. And now we have all of these things literally going wrong at the same time in terms of the coronavirus, the oil prices, and it's just almost impossible to imagine a situation where more things could go wrong.
I mean, we saw what happened after the SARS outbreak and what the impact was then, especially on manufacturing. But I'm sure this is more because of the snarling of supply chains and disruption of companies.
Absolutely. I actually went back and looked at what happened to stocks after SARS, and over that year, it actually gained back all of that loss plus a bit more. So we don't know where we will end up with this, but I think it's more widespread. Obviously, I'm not a virologist or anybody that has extensive experience from that, but from what I understand, it is less deadly than SARS, at least on the positive side, but the spread is so much faster and quicker. And I think just because we had these levels of uncertainty and panic, and with the U.S. markets probably already in a bubble situation before this is just the trigger that basically went or caused everything to tumble down.
I'd imagine that the biggest threat is the fact that globalization has encouraged companies to build supply chains that cut across national borders. So that makes economies even more interconnected. So what do you foresee as the impact on South Africa, for instance?
Yeah, so China at this point in time, contributes about 30% of the total manufacturing globally. So, and then that's followed by the US by about 15%. So obviously, a lot of dependence on China. We already know that. For us as South Africa, it's our most important trading partner. So in terms of getting stocks in, that plays a role, and as well as the demand for some of our minerals and goods and services that are typically exported to China and being used in the process there. But I think what we might have missed a little bit with our focus on China is the potential impact on Europe, where the EU as a bloc, our second largest trading partner, and actually the UK in particular, a big source of export demand for our vehicles. So we could potentially see some knock-on effects from there. We've already seen South African businesses saying they're relooking their supply chain and, looking at where they can find alternatives. But it's not that easy. It's not to say that the supply is there. It might have an impact on prices if you're looking at other areas. so it's quite a complex process, but I think what has happened is that companies have woken up and said that we should have a plan B if something like this happens.
And as you mentioned, the automakers, I'm thinking we are very much dependent on that, not in terms of parts and assembling, but you mentioned Europe as well. I see companies such as General Motors, Renault, Volkswagen, Toyota, etc. They've already stopped production. There's luxury good makers as well, which we're also dependent in terms of what we buy and sell.
Absolutely. Some of the minerals and goods, if you look at mining in particular, it's a sector that's already been under a lot of pressure in terms of slowing global demand. And a lot of these precious metals and minerals and so on are inputs into this process. We're thinking about smartphones, for example. There's certain minerals that we supply there. And then again, the smartphones are also not coming in from China at the moment. So on both the demand and supply side, unfortunately, it has a negative impact on South Africa, on the retailers, on the miners, etc. But there are other opportunities that's being created maybe for some of our logistics firms that's saying, well, is there a way that we can get involved and provide alternative opportunities to get goods back to South Africa? And if you look at healthcare and pharmaceutical, etc., there might be other opportunities down the line. So it's a time to rethink how we do things.
And it's interesting that you say that. And I'm thinking about the cascading economic effects. There are those who say rising nationalism has made it very difficult to have a coordinated world response. So is there where the opportunity lies for Africa, for instance?
Yeah, I think this could potentially just make us rethink how we engage with each other. Because at this point in time, we're by far the continent that have the least cases that's been reported. And, in terms of vicinity and how we can help each other, something like the Africa Free Trade Agreement that we recently signed, we should try and look at blocks and, production of goods and services in blocks and trading blocks more and more on the continent, because we've been just so dependent on the rest of the world. And I think this once again has just proven to us that there's some real opportunities for us to look in our own backyard. What you say around nationalism is something that we've probably seen for the last 5 or 6 years, this rising tide. And unfortunately, as you rightfully say, people tend to turn inward and try and protect themselves. We've seen travel bans, we've seen all kinds of things. And the World Health Organization in some instances saying that that's maybe not the right way to go.
All right. Lulu, just before I let you go, the tourism minister holding an indaba, so to speak, with stakeholders about the tourism industry. What are your predictions of how badly we'll be hit, just as you mentioned those travel bans?
Yeah, so luckily for us, it seems from a local perspective at this point in time, people are moving around still as normal. The airlines seem to also say that they haven't seen a massive change in their numbers locally. Maybe there's an opportunity for us, all of us that have the means, that tend to travel abroad and into the rest of Europe, say that let's focus a little bit on local travel. But let's face it, unfortunately, we are also dependent on tourists from China and from somewhere else, although the China tourists are actually a reasonably small portion of our overall tourism numbers. The majority of our tourists actually come from Europe and then from the rest of Africa. Yeah. So hopefully we will be a little bit shielded, and because we actually need tourism as a job creator. But there's definitely disruptions in terms of tourism numbers already starting to flow through.
Thank you so much for taking the time to share your insights with us. Lullu Krugel, Chief Economist at PwC.